G'day traders, I'm Greg McKenna. Welcome to Markets Morning. It's the 5th of October, non-farm payrolls day. It could be a very, very big day for markets. We've already seen bonds kick off and prepare for a big increase in wages. Markets currently forecasting 0.3% and potentially an even bigger increase in jobs. Markets looking for about 185,000. So what we've got is we've got some big moves in bonds. We've got the euro having moved. It's back above 115 this morning. Sterling is back above 130 as well on some positive Brexit news. But risk went off because of the bond sell-off, and the S&P is down about 0.8 to 29.01 and looking quite dangerously tenuous, if I could mix up that little message. We'll have to keep an eye on where that goes and what that number prints tonight. So that meant that risk off kind of feel meant the Aussie's down. Aussie got down to 70.66 at one point last night. That's the lowest since that 2016 low at 68.5. Increasingly, it's looking like the Aussie will head down. Now, tonight is a big night. It's a big night because we've already had these moves preempted. So the question I'm asking myself is if we already priced in a good number, and that's an interesting thing for traders. And it's too early to tell. I can't. At 8:30 New York, I'll have a better chance to explain that. Right here and right now, there is some priced in, perhaps into bonds, but not necessarily into euro. That euro price action tells you that there is still a lot of people who don't believe the Jerome Powell, the bonds, and the hype about the US economy. Anyway, let's dive straight in, and I want to talk about oil collapse last night. Very interesting market there. I want to talk about bonds first. So here's a chart from Markets Morning earlier today, and what we've got is we've got the 10-year US Treasury, we've got the 10-year Australian Commonwealth Government bond, we've got Germany's 10-year Bund, and we've got the UK's 10-year gilt. Now, what you can see is that just over the last couple of months, these, and particularly this week, these rates have risen again. Now, I wrote and I spoke about that technical issue with the tax that was keeping US bonds beat in the back end and the curve flatter than the economy expected. We had all the recessionista hand-wringers saying, oh, flat curve means we're going into a recession. That was thin slicing. Part of being a macro trader is you have to also understand the key drivers. You've got to build from the ground up. Anyway, we still will eventually get a recession in the States, but the question is when. Certainly not on the time frame that the spread, the 2s10s, got down to 18 points. Anyway, what we've got is we've got bond rates rising. What will happen? 318 roughly, the rate this morning for US 10s. If non-farms misses, we'll easily be back to 312 and have a false break on the week, a long tail false break. If, on the other hand, we get strong wages, strong data, then we can easily be at 325 or somewhere like that. Such is the importance of this break. As Peter Brandt said, a generational move in the 30s. Looking at currencies now, and I'll go through the normal list. This has all changed. I've tried to make it, I've got rid of some of the charts I wasn't looking at. Euro here. Now, this is a positive day for the euro, but it's still a lower high, so the downtrend is still intact. And what we've got here, as you can see, is that we made a base. Last night's low was around about 114.62. So it's neither here nor there in terms of the break or the move. It's not really enough to satisfy the break, but if we end the week back above 115, then that will reinforce that level as important support. Close below 115, and we're looking at a 113 or thereabouts for euro. There's no point really talking too much about the fundamentals because, well, I should actually talk about. I'll go to sterling and then we'll come back for dollar yen. So you can see here. Let's just blow that up a little bit. A nice big fat rally, and what's happened is Jean-Claude Juncker has said that the EU is offering the UK a Canada plus. They're trying to get a deal done. It seems that the leaders don't want a hard Brexit. And he did say that the language, the rhetoric in the UK was unhelpful. And I guess that's the reality now. What will what will the deal look like? Theresa May's trying very hard, it seems. News last night, trying to stay in the common union kind of thing so that there doesn't have to be a hard border while they try and work it out. So we'll keep an eye on that one. But the chances of a Brexit deal have probably gone from me being 55-45 to maybe 50-50 at the moment. Looking at dollar yen now, and it's reversed. Have a look. I'll do it in the weekly so you can get a sense. This level has been in here for a very long time. This, for me, is the key to the kingdom of whether or not we do get that run to 116, and in fact, whether or not we don't get a run back to 120 or something like that. If non-farm payrolls is strong, if the data continues to print strongly, then ultimately dollar yen should go higher. But you've got the balance of that in that dollar yen is a risk. A risk hedge in many ways, and has been for foreign exchange traders for a very long time. And that's partly why you saw, it's an inside day, of course, but why you saw that move back. The uptrend is not threatened unless or until we get back down to this trend line, and that's 113.50.60. I still think, I mentioned it yesterday, I think, that I still think it will head back down towards that line and test that. And the MACD, probably a day away from a signal. What's that? 6623. 6601. So the MACD is still rising, so not a signal yet, but keep an eye on that. Obviously, with the Japanese bonds at 0.1155, the Bank of Japan looking like it's happy to let them slip anchor a little bit. We could see the yen get a bid in that sense, but let's say 3.18 versus 0.18, there's a 300-point pickup there for the US traders. So not that people hedge their currency positions with the 10-year bond rate, but you know what I mean. So keep an eye on that. That should be heading higher under current circumstances, but if stocks go off it, and I'll show you the S&P in a minute, then that will mitigate any rise in dollar yen. We've had a look at sterling, so let's have a quick look at Aussie. So the battler, this is the weeklies. The battler looks terrible. We've had a big reversal of 73.14. We've had this big fall this week. We've made a new low last night. If we close down here, then you've got to be calling. Well, you don't got to, but the outlook looks like a retest all the way back. So just a big round trip back to 68.25.50 or thereabouts. So still looking wobbly. A weak non-farms would see the Aussie play a bit of catch-up. Stocks probably rally. So Aussie yen would probably do okay. Euro Aussie would probably fall. There'd be a bit of catch-up. But any move, back sort of towards the 71.70 to 72 cent level is likely to be offered. In terms of the Canadian dollar, we've still got this downtrend. So we've moved back up into the space here. Non-farms again. Big non-farms, we're back up towards where this channel sits, just something like that. So you're back up to sort of 130.20 or something like that. So 100 points from here would be my kind of suggestion on non-farms. What I will do, and I always do on a Saturday, is I will sit down and look at those 30 markets or so, and form a view based on what we get as the weeks close. This is the offshore yuan, still a holiday in China. Looks to me like there were some bids from officials last night. We did start to break out. We're at 689.20. It does look like it's headed to 694. As long as it stays below 698 to 7, we've just got a topping pattern. If you look at it on the weeklies, you can see that it's very much overcooked, but has had a breakout, still above that break. So keep an eye on that. That's probably, besides US bonds, the most important price in the market at the moment. Gold is really hanging in there, folks. Very, very interesting price action for gold. When I think about it, I think there's risk off tone. Could gold catch a bid? I think it could. It's done. I would have expected with euro down in the 114s, that gold would have been down in the 111.80s or something. Sorry, the 11.80s or something like that. It's not. It's held near 1200. We could be forming a base, but I am not bullish. I would have to see 1220 give way, and even then I'd have to see 1240 give way. Copper gave back some gains last night, down about 1.8%. I've drawn this little color in here. This is a daily chart, of course. So we've got 286 and a half, that high. So there, we got back there last night. The really strange thing about copper was last night the Aussie was offered, or yesterday the Aussie was offered, but copper was up. It was very, very interesting price action. We've seen that reverse now because markets have got funky. People are worried about weakness in global economy, stocks selling off, all those kind of things. The MACD does suggest a retest back towards the bottom of this range, and if that was to break, so we've got this this candle here. What's that? That's a 275. So we're only, we're not far away. You get down through 274 and a half, which is the level I talked about earlier this week, and then you can see the cascade lower. That is an interesting range. Keep an eye on that. If you're a short-term trader, that's a nice little range to trade on the 4 hours. WTI and Brent got absolutely polac. So yesterday we had a bullish engulfing. Today we've had quite a bearish candle. MACD looks like it's starting to roll over. It's interesting with oil. Some of the stuff I talk about here in this forum, some of the stuff I talk about and write about, then gets quoted 24 hours later when I'm doing my research as reasons for what's going on or what's happened to oil. Now, I don't say that to blow my trumpet. I think there's a lot of narrative fitting to the price action for oil. Of course, last night, the fact that the Saudis and the Russians said they'll continue to work together was something we talked about yesterday. But that was what people latched onto. Price did go, if you look at it on the 4 hours, price went a little bit vertical. It's come back down. It does look like it's going to roll over, but I'd want to see it below last night's low before I'd get too worried about it. In WTI terms, I'm actually expecting, as long as the high doesn't go, 72. So where are we now? We're 74.60, 72.12, sort of 10.15 to 72.70. Sorry about that. The danger of having your phone headset on when you're actually doing a video. Anyway, so that level, that 72, sort of 10.15 to 72.70 is the 38%, the 15-day moving average, exponential, and the parabolic stop and reverse. So I am looking for a move back to there. In terms of Brent, if I can find Brent, there it goes. There it is, I should say. Similar kind of thing. This is a classic kind of topping pattern that I look for when I'm trading. We've got the MACD has got to an extended level. We've got a big up day and then a big rejection. Now we're just waiting for a break. And for me, obviously, as I said yesterday, you've got that trend line there, and you could have drawn a steeper trend line, which it's held above. So the key thing for me now is a break below 84.13 would get you moving. And then you've got 83.48. If 83.48 got taken out, then I'd be looking for a much deeper move. So you've got to keep an eye on that one. The narrative, of course, is that oil's got to the kind of levels that is starting to threaten its own demand curve, if I could put it that way. Now, this is the S&P. I want to talk about this one. What have we got here? We have got the little uptrend within this broader uptrend broke. Now, we found support. That's about 2889 or 2885, according to that. I think I've written 2889 on my charts this morning, but 2885 is support there. Now, if that breaks, it's not catastrophic by any stretch of the imagination, but we did talk about it coming back down towards these kind of levels. There's a little bit of a ledge along here, and if that was to break, then you've got the downside opening up. Now, what would I expect? I would expect if we just go, that is the up move, and then we look for the 38.2%. I would expect 27.95, so good 90-point fall if we get a move below this level. So depending on where you put it, but let's call it 28.85. Now, why does that matter? If you have a look at, do you see what I'm looking at here? See the shape of this move? It really does look like, in the MACD here, it really does look like you'd need to see a new high to negate the chance of a move back down to 27.95. If we're heading back down to 27.95, that means bonds are going higher. That means the SPY's going down. It probably means the US dollar's going up. It probably means that emerging markets are under pressure. The question you've got to ask yourself, though, of course, is at what level does a stock market sell-off then impact on bonds? It's not exactly the same sort of linear relationship you would have seen in the past. This is our SPY here in Australia. An interesting day yesterday, a reversal away from resistance. A bit of a failed day. We fell, 27 odd points, I think, overnight after what was a pretty good day yesterday. And to me, if we've got pressure on US stocks, then there's pressure on Aussie stocks. If you have a look at the relationship between the Australian market and the US market, we need the the US market, US market to hold up so that the Australian market can hold up. Now, DAX, this trend line is still the one that I'm watching, still holding. If we take out that low, 1225, then we would go to the next leg lower. So short term, that's the level I'm looking at. And my Bitcoin chart, there he is, still going nowhere. 1 or 2% moves day in, day out, but not much else. Now that's it from me. We've got some data out today. We've got retail sales in Australia. The market's looking for 0.2%. Retail sales is super important for the Aussie dollar. It's super important for Aussie rates, and to a certain extent, it's super important for a subset of stocks on the ASX and thus the SPY, because the concern in Australia about the economy is about households, is about consumption. So keep an eye on retail trade today. That's going to be really important. After that, we've got PPI in Germany. We've got a few other things. And then, of course, non-farm payrolls. 185,000, 3.8%, 0.3% for wages. They're the three key metrics. Revisions have been a big influence over the last few months, but keep an eye on that. It's going to be a big number at 8:30 New York, 10:30 my time, and what's that? That's 1:30 in London, I think. So anyway, on behalf of myself, have a great weekend. I'll be back on Monday, and I'll catch you then. Bye for now.